let's talk about S corporations. So S corporations are awesome. When you're looking at different types of business entities from a tax standpoint, the S corporation has a lot of advantages over other types of business entities. Just like a partnership, with respect to tax purposes, you're going to have one level of taxation. But there's key elements where S corporations have some advantages over partnerships, but they're also limited with respect to the comparison of partnerships. Again, that flow through aspect, that flow through taxation, one level of tax in comparison or in contrast to C corporations. So S corporations, they mean small business corporations. And as you're going to see, S corporations have requirements that limit it to small businesses. Now, one thing to note is that from a legal entity standpoint, a non-tax, just a legal liability standpoint, when you file to be a corporation for state law purposes, there's no distinction between an S and C corporation. This is a purely tax distinction. Federal tax law and also state tax law, the difference between an S and a C corporation. Again, the S stands for Small Business Corporation, also found in subchapter S of the Internal Revenue Code for the Income Tax chapter. The C for C corporation is all other general corporations, and that's found in subchapter C of the income tax area. Now, you're going to see, again, these different requirements for limiting the size of S corporations. You're going to learn all about that. But the idea you're going to see is that, generally speaking, it's not meant to be for sophisticated businesses. It's meant to be more for the working class type businesses, and it can be any type of business that meets the parameters, but most working class businesses out there where you find business owners like plumbers and maybe landscapers, things like that. And I got my blue jeans on because when we talk about choice of entity later on, one of the things that we're going to note is there's what's called the blue jean rule. If the owner comes to you as the tax professional and they come in blue jeans, they probably have some type of straightforward business arrangement. Maybe it's just them, or maybe it's multiple owners, but it's very straightforward. We split everything down, equally. Okay, nothing crazy where, okay, one owner has to get his or her share of money back, before the other owners get anything. That would make things a lot more difficult because, again, small business corporations, S corporations, are meant to be for simple. Think of S, think more simple. And that's, again, what the blue jeans rule. So always think about the blue jeans, okay? And this is something in the 1950s that in the U.S., that's why I got my America hat, became a big thing. And you've seen throughout the tax law that small businesses, there's a theme that small businesses get really big tax breaks. They get very generous tax breaks. So always keep that in mind. And an S corporation is a very awesome tax vehicle. Okay, with that, let's get into the material and let's talk about these things.